Good weekend, everybody. It is Dave at PreciseAlgorithmTrading.com. Wanted to get with you guys this weekend, do a little overview. It is Saturday, June 17th, 2023, and we'll start here at the website and give you a rundown of how, what we've got loaded here on the website. So we've got on the front page, um, really some how all this works. It's not it in a nutshell, but it's we've got what sample equity curves look like, and we got some videos here of what a trade looks like when it's going, and you can click it and watch it. Um, we've got some these these are clickable down here, and you can see how the performance reports look, and I'll show you like this, and that was obviously a snapshot in time because day to day and week to week these things change, which is what we do on the daily review tab when I go through them every day. But then on the products page is where you can get these indicators that we use, um, and actually the systems themselves. But then I actually need to update a couple of these, and we've got some new indicators that we've been building here, and some updates to the ones that we have. And then the algorithm trading systems over here is really where we explain how drawdowns work and what the equity peaks look like, and then the manual trading systems. And it's really, I mean, I go through them every day, so hopefully you're picking up how those things work. But um, the manual trading systems, you actually have to do your stuff all by hand. But the automated trading systems, the system does it for you. All you got to do is make sure your system's on during the trading day. And then the terms, I want to make sure we're clear about the, you know, um, we're not financial experts or we're not certified and all those things. These systems are, you're trading at your own risk, like you always should really be investing with your own. It's your own money, and you're making your own decisions, just like we are. But we're just trying to help and provide some training and some resources and some tools and that sort of thing. So I wanted to also hit econoday.com. This is handy if you're looking to see what might make the markets move in a given week, and I take a glance at this every now and then. Monday, um, the upcoming Monday here, what's 18th, 19th is Juneteenth, and the markets will be closed. But if you hit this button here, view full calendar, you can actually see. Yeah, well, you can see a thing. This is unfortunately this week. I don't even think I can click into next week yet, which is sort of weak. But if once we, like tomorrow on Sunday, I think you'll be able to come over here and it'll start the new week, and you'll see Monday. It'll say it's Juneteenth and blocked out, so the markets will be closed. The and then let's go right into our um, into Thinkorswim here, so we can see what the markets are doing. So here is the S&P 500. We have been grinding or blasting really higher. This is these dotted lines up here. The white lines are two standard deviation move from last week's price. So you can see when we get up at around two standard deviations, normally we will get some pushback, at least some back and fill, which we started to get on Friday out of the S&P 500 here. The it just so happens, like let's look at one ABC, I think. Well, no, I'd have to go through here and find some good ones, but sometimes these things blast through their two standard deviation move, and those things are just they're just a beast. They're on fire when they're going. So, all right, so the Dow on Friday also pulled back, and but everything was really I mean, everything was really up big on Thursday after the Fed held rates on Wednesday. So this is all really part of trading. You got to take the good with the bad, and Friday a pullback going into a weekend is really common. So really not unexpected there. We are expecting some headwinds now because we've blown up so far so fast. But that's the 52-week high on the Dow right there, the white line. So right here around 34,700. So if we hit that 52-week high, I actually either expect to blow through it initially and maybe get up to this 2 standard deviation move, or we'll hit resistance there and pull back harder into that purple line, that green line, and possibly this blue line down here. So those are just moving averages. They're different moving averages for different time frames actually. And all right, the Russell. This is actually a lot of back and forth here in a nice up zone. This gold line and bright blue line here is our Harvard indicator, and it's really a trading system in and of itself. So when you get a close above for the month, above the gold line on the Harvard indicator, which we won't have until the end of June at this point, and that's if it stays above that line. That's actually a buy signal on a longer term basis. So you'll see literally if we go back here to the Dow, yeah, it's blown up and through it, but it still never it didn't close there for last month, and that's what that if you go from where my cursor is here back and forth, that's last month. Well, now we're into the middle of this month. We'll see if it holds, if it can get up through. And then another thing, if you look at these in context with each other, now the S&P 500 did stay above that line. It stayed above that line last month in a big way, and then you can see it took off from there. So the market, I'm going to tell you, at least some segments of the market actually understand this system. That's why it's called the Harvard line, because it's based on a Harvard system that's been traded for or invested in years. And so it's, anyways, you can see the S&P 500 really respected that trading system. So then let's get to the NASDAQ, and you can see the NASDAQ here did the same thing. So the NASDAQ's been blowing up. Actually, it closed higher than that 2 months ago, and it's been above it for the most part, except it dipped down below it in the middle of last month, and then just powered higher. So that's the Harvard system. And then let's look at transports, because it pulled back on Friday as well, but really not that much. I mean, it's all up here. I mean, they're all powering higher, but things can't go up in one direction indefinitely. They have to back and fill a little bit. That's just how it works. So what did oil do? Let's look at the USO contract. So oil's been bouncing around in a zone, trying to figure out which direction it wants to go in, and right now I'm going to say it's pretty directionless. So nothing really to, I mean, it's down, so it could break out in any direction that it wants. We are, if the actual, I wonder how hard that'll be to load. All right, the actual USO or the CL contract, which is the futures contract, is in a squeeze on both time frames, and that's what these red dots mean. So the Bollinger Bands are inside the Keltner channels, and that means the price is just, it's quieted down in a sideways, mainly sideways motion. If we go up here and grab a drawing tool, I'll put a box around that area, and we'll go from here and box this zone in. That's really the zone that it's been boxing around in, or bouncing around in. So if we get a blowout in one direction or the other from this zone, which means it's got to clear all the lows and the highs, then this thing's going to be really, it could be a powerful move because we also have it going on the weekly chart. So new trends tend to develop from the inside out. So I mean, you have to get it going on the daily in order for the weekly to pick up. That's just natural. All right, and then let's flip back to the S&P 500, and I'll show you a couple other things. So this is our, I mean, it's not really our study. This is just 3 ATRs to the upside from the mean and 3 ATRs to the downside from the mean. It's not a whole lot different than standard deviation, at least in my opinion. Some mathematicians might disagree, but you can see here we are well above the third average true range. It's what ATR is, and when you get up above the third average true range, and this back where the cursor or my crosshairs are, you can see we tend to go the other direction. Well, that's what I'm looking for at some point here. It's probably going to catch some people off guard, and it's really what I'm trying to explain or show why, so you guys can be aware. So, um, and then last but not least in this segment, this is our McClellan oscillators. They're not ours. I just have them set up this way in a chart, and I've actually got the 200 highlighted along with the 60. The 60 level is what a lot of people look at, but because of the volatility, you can see this thing gets up above the 200 level quite a bit, and when it does, it's typically um, running out of gas and wanting to go the other direction. So if you watch these, like this is the McClellan on the bottom for the NASDAQ and the NYSE on the top, and if you look at them together, when they both roll over at the same time or roll up at the same time, it's more powerful. And then I've drawn the Fibonacci's from the high to the low in the recent price conditions here, all the way back to 12:30 at 21. We're above the 618. That is a crucial point to be at. We're heading into the 786. If we can get above the 786, then we can expect the market to get back up here to the 100% line. And I'm going to tell you, if that happens anytime in the next couple months, this market is finding its legs, and I'm guessing we're going to new all-time highs within the next 6 months to a year. It's just if it all rolls over from here and we get a close below the 50 or the 50, I'm sorry, all the way down here, um, then we're in trouble. The economy's in trouble. The whole recession that everybody's been talking about is probably going to be really take hold. Some terrible things can happen. But I'm going to tell you right now, since we've blown up past the 618 and it looks like it's wanting to head into the 786, that the skies are generally pretty clear. In the longer term, not necessarily in the short term. I think we're going to get some pullback and some chop around in this zone, which is hard to take sometimes. So I hope this is helping people. And then last but not least, so our trading systems, the automatic trading systems, they've been chopping around quite a bit lately, but they're all still good. So here's the YM. This is the I've been talking about this lately. We mixed the quarterly contract with the continuous contract to get some better back data. We have been getting good fills, um, and this thing's been just pulling back hard lately, and that's okay. It's tough to take. That's why we have the systems the way that we do. We if you go read the recommendations on account size and how big your account has to be able to trade one contract, and you have to have enough equity to withstand 3 times the max drawdown, or four's better. Um, that's because you have to be able to take this type of action. And if you look at this is what the YM looks like on a yearly basis. This is 615 to 615 of 22 to 616 of 23. We've been chopping around this way for a long time. We do have a new equity peak that happened back here just a month or so ago, but this is what we're trying to get, is really just we want to go this kind of move all over again. And I'll take this sideways action here to be able to get into that, if that makes sense. If your risk tolerance isn't like that, I wouldn't trade the YM the way we do. So this is the Russell, and it was a little rough on Friday for us, but it's been, this zone right here is a decent zone. It's a lot of back and forth, and we're looking to take out that last equity peak. Um, so this is just the results of the trading that we have built in to the system, and this is what 1 year's worth of data looks like for us here. So it's a good system. It is a lot. It's a pretty choppy system. So what? And then this is my favorite. The NQ. This is the quarterly contract mixed with the continuous. The quarterly is probably just this much. Actually, it's just recent because we switched over to the quarter. It's only literally like that. But the last quarter was only this much, I think, something like that. Sorry, switched on you. But we had a pretty big drawdown on Friday, but that comes after a week of a pretty good move up, and then this is what it looks like on a year-long basis. So what we're trying to do is really build systems with very narrow drawdown areas. Sorry about that. Software has a mind of its own sometimes. So like this one, and really what that looks like, what these look like, this is a drawdown area here. Well, that's the same as I think this one. So hopefully all this makes sense, and hopefully it's helpful. So we will wrap this thing up for the day, and hope everybody has a great weekend. Take care, good trading, and remember, there's no trading on Monday, although I'm going to turn on our automatic trading systems and see what happens, just because I don't have holidays built in. So if we get an up move on a holiday, I want to participate. That's a judgment call, just so everybody knows. Take care, guys. See ya.